Good morning, good afternoon, good evening, and welcome to our 339th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA like you see on Reddit, meaning you can ask me anything. You can ask me business questions, career questions, investing questions, personal growth questions. And my humble goal of this call is to help you take your career, your happiness, your portfolio, et cetera, to the next level. Now, before we begin, I've had a lot of questions over the past week on why I believe Bitcoin should be worth $1 million. And I've also had a lot of questions on how to find out what the smart money accounts own, meaning what stocks. So you can do research based on that. Specifically, Scion Capital Management, meaning Michael Burry, who was featured in The Big Short. He just shut down his fund, Scion Capital. And I'm going to show you how to tell what stocks he's long and short as well. Now, always do your own investment research. Obviously, don't rely on anybody because nobody is smarter than you. All right, so let me kick it off with talking about Bitcoin. Okay, so I believe that Bitcoin at some point in my life will hit $1 million, probably within 20 years. And let me talk about my thesis very quickly. So right now, there's $96 trillion of this stuff, meaning all currencies M2. Okay, and that's an increase of about $6 trillion since COVID. So I believe that global or countries are going to print an increase. They're going to increase the supply of money by 5% every single year for the next 25 years. So what that means is in 20 years or 25 years, we're going to have about $250 trillion worth of money. Now, right now, cryptocurrencies are about 3.65% of the total money supply out there. And I believe that Bitcoin is going to be 10% of the global money supply in about 20 years. And this justifies my target price. Now, let me show you the math behind this very quickly. All right, so let's go together to, I guess, ChatGPT. And I'm going to show you the formula for this. Okay, so here's what we'll do. So future value of $96 trillion, okay, times 1 plus 0.05 to the power of 20. Where's Sharpe? Here it is here. Okay, so this is how you calculate what the future value is going to be if the money supply grows from $96 trillion today by 5% every year. So that's $245.7 trillion by the year 2045. And so I think that Bitcoin's market cap will be 10% of this, which means it's easily going to be more than a 10 bagger. Now, one of the catalysts that gets me really bullish about this is the fact that when I first started investing in cryptos more than 10 years ago, 100% roughly of investors in crypto were retail investors, meaning us. Then what happened was in 2024, the SEC blessed or is allowing spot futures ETFs investing on Bitcoin. And the reason this is incredibly positive is because as of today, about 15% of all ownership of Bitcoin globally, roughly, is institutional money, meaning big pension funds, endowments, institutional investment firms like mutual funds, as well as hedge funds and sovereign wealth funds and governments. This is huge. It's increasing slowly every year. And I believe that within 5 years, more than 50% of ownership in Bitcoin is going to be by institutional investors, again, versus 15% today. Now, why is that a big deal? Because the great thing about Bitcoin is that there is a limit on supply. So as of today there's about 20 million Bitcoin out there. And the maximum supply of Bitcoin ever is going to be 21 million by the year 2140. That's a huge deal. Now, one of the reasons I think that ETFs for Bitcoin is a massive deal also is because of this. So traditionally, when you buy Bitcoin or cryptocurrencies, you might use a cold storage wallet like this one, or a hot storage wallet like Coinbase. The problem is, when you use these cold storage devices, which are really, really secure, they're so damn complicated that at the very last second before you buy, you cut your order in half. Now, the precedent gets me bullish on why ETFs are a huge deal for Bitcoin is because back in 2004, the gold ETF was created, ticker GLD. And so what that meant was back in 2004, it was easier for all of us to buy gold. We know it's real and it's liquid. We can sell if we want to. Before 2004, a lot of people would go to seedy parts of cities to buy gold, and we didn't know if it was real. The second the GLD ETF came out, anybody can invest. And I'm a bull on gold long term. The same thing happened with crypto. In 2024, the government allows you in the United States to buy spot-based Bitcoin ETFs. Really, really bullish. So if you want to do more investment research on cryptocurrencies, and the problem with cryptocurrencies is that you can't, there's no S1 for it. Okay, so when you invest in any stock, what I always recommend that you do, what I always recommend is that you read the S1, meaning the offering memorandum that bankers and lawyers make. And it details all the risks. And so this year's the Facebook IPO. I invested in Facebook when it was private, my venture capital fund, and also shorted it when it went public. Okay. And then went long afterwards. And I can talk about that. Now, how the hell do you do investment research on cryptos if there's no document like that? Well, I created a template for my clients. And let me show you what it looks like. So what you do is, this here is how you do investment research on cryptos. Okay. I created 49 steps to mimic an S1. It's not as good as an S1, but there's a lot of investment research here. Now, the most important part of doing investment research on cryptos is the valuation methodology, which I just explained. The very last thing you look at are technical analysis. And if you have any questions on cryptos, etc., please let me know. All right, let's move on now to how do you do investment research to find out what your favorite money managers own? Okay, now, first thing I want to say is that I don't want you to buy any stocks because somebody else owns them or anybody else recommends them, including me. Always do your own research. But how can you tell what institutional investors own? Well, let's do a real-life case study. So Michael Burry from The Big Short, the guy that went massively short housing-related stuff in 07, 08, his fund is called Scion Capital Asset Management. And on November 10th, he shut down his fund. And we're going to find out what is in his fund, longs and shorts, in a second. Now, one of the reasons he shut down his fund is because he doesn't understand why valuations are that high. And I want you to be careful with following people that are bearish, okay? Because they're usually only right once in their life. It's true. Look at Paulson Asset Management, who made a fortune shorting the markets back in 07, 08. He hasn't really done as well right now. So let's take a look to see what Michael Scion owns and how you can tell what everybody owns. Now, what you can do is there's something called a 13F. And by law in the United States, if you manage over $100 million, you have to disclose what stocks you own every 3 months in what's called a 13F. So I'm going to show you how to access this right now. So what you do is we're going to go together to sec.gov, the Securities and Exchange Commission website. And right here, I'll type Scion Asset Management. Here it is right here. This is Michael Burry's fund. Okay, great. And then we look down here and we see something called a 13F. Whoops, 13F. Let me scroll down there again, right here. All right, and let's click here to see exactly what he owns. No, thank you. We click here on Info Table. All right, so we see the stocks here that he owns and that he's short. Again, he shut down his fund a couple days ago on November 10th. So right here, we can see that he's short NVIDIA and Palantir. So he's short the AI stuff, and he's short a bunch of other stocks. So this is how you can tell what people own, okay? And you can find out if they have puts and calls as well. And you could also find out if they're long stocks as well. Okay, so I'm going to go back here, and if you have additional questions on that, please let me know. Now, when you're doing investment research on stocks, the most important thing you start with always is the management team. And this here is 100 steps on how to do investment research on stocks I provide for my clients. If you're interested in getting a copy of this or joining my my coaching services, please go to the link in the description, set up a call with me. Thanks. All right. All right. Next question is from Malcolm. Hey, Malcolm, how are you? Malcolm wrote, good evening, Chris. Hey. How can a young person like me build credibility in the business world when most people look for degrees or traditional credentials? Thank you and God bless you. God bless you more. Yeah. So what you want to do is you want to stress how your background differentiates the workforce at a company. So given the fact that you're younger, you understand how your demographics and your age group thinks in terms of social media, etc. Now, what I always do is I always have my clients take their weaknesses and turn them into strengths. And I can show you how you can do it regardless of whether you're, pardon me, a client or not. So as part of my program, I've got here a 150-page exercise book to help you ace your finance interviews. Okay, and so there's tons of questions. And one of the first questions I ask here, I'm going to give you guys this prompt for free, and I'm going to paste it in the chat. Okay, so right here, if somebody asks you what are your weaknesses, then what I want you to do is I want you to copy this, and I'll put this right now in the chat for you. Okay, and I'm going to have to do it in 2 parts because it's long. Here's part 1, and here's part 2, and here's part 3. Now, let's take this together and let's go to ChatGPT to see if we can find out how to turn that weakness of yours into a strength. Let's go to new chat here. Okay, here we go. All right, I'm interviewing for a finance job at, I'll make this up, Goldman. And I'm worried I won't get hired because I don't have enough work experience. And I am too young and I don't have the right degree. The job title is, we're going to insert right here, analyst. And the job description is investment banker. Don't worry about typos. And then what you do is you're going to paste your LinkedIn profile here. Okay. And then it will tell you how to turn your weaknesses into strengths. Now, I didn't paste in the LinkedIn profile, but let's see what it says right here just for fun. Okay. Okay, to position you, you want to say you bring a fresh perspective, adaptability, and no perceived biases, yada, yada, yada. Emphasize your trajectory shows hunger, discipline, the ability to outperform expectations, despite yada, yada, yada. Okay, good. Now, what you want to do also is you want to paste in your entire LinkedIn profile so it can give you the appropriate response. If you have follow-up questions, by all means, please let me know. All right, let's move on now to the next question. I'll change camera angle so you can see my messy desk here. All right. Next question is, I began to read Think and Grow Rich. It was written by Napoleon Hill back in 1937. It's an oldie but a goodie, and it mainly deals with personal growth. Okay. Despite the controversy surrounding the book, I think it's very interesting. What are your thoughts? Yeah, so the controversy, first of all, on Think and Grow Rich is that Napoleon Hill was potentially accused of mail fraud, okay, with one of his lumber companies. But basically what the book does is it's a personal growth book that helps you to thoroughly understand how to increase your motivation and how to achieve your goals. And let me summarize it for you really quickly. Like the Rodin sculpture, I think, therefore I am. Okay, so if you have confidence issues, it's your fault. And I say it with love in my heart. Okay, so I think, therefore I am. I think, therefore grow rich. That's what he's saying. The second important thing I want to say is this. Regardless of which motivational speakers you listen to, one of the most important things you can do is set your goals. Now, this is something I give to my clients as well. They complete this every single day. And it's a schedule they're going to, for tomorrow. And before they complete the next day's schedule, they score themselves. They take 10% off for every violation. Like they didn't get 7 hours of sleep, they didn't eat the right foods, didn't exercise, didn't attend meetings, had negative thoughts about themselves, etc. Now, in the class of 1950 at Yale University, the entire class was asked, what percentage of you, or how many of you have written down your goals? And only 3% said, yes, I wrote down my goals. Then 20 years later, in 1970, they went back to that same class and they calculated the net worth. And the net worth of the 3% that wrote down their goals was greater than the other 97% combined. So what I recommend doing is this. When you use these one-pagers, you don't have to use mine, you can make it up yourself as well. At the top, you're going to write down your goals. And in brackets, you're going to put a deadline date. And I learned this from Tony Robbins. Actually, about 10 years ago, Tony Robbins, when I worked in venture capital, I spoke to him and I introduced him to one of my portfolio companies. And he convinced me to quit and start doing this. But you want to write down in brackets your deadline date for each goal. Because Tony Robbins said the reason that most people give up their New Year's resolutions by the 3rd week of January is because they don't set a deadline date. So set a deadline date. And Elon Musk, who's a little bit out there, but he's brilliant, he also once said, if you set a deadline date of 3 years, you'll get it done in 3 years. But if you set a deadline date of 3 weeks or 3 months, you'll get it done in 3 weeks or 3 months. And please be careful with perfection. Okay, it's the enemy of progress. And as Salvador Dali, a great painter, once said, if you aim for perfection, you'll never reach it. And Reid Hoffman, the legendary co-founder of LinkedIn and venture capitalist at Greylock Partners, said, If you release your product when it's ready, you've already missed the market. That's why there's a concept of MVP, meaning a minimum viable product. All right, moving on to Ray. Hey, Ray. Ray wrote, would you invest in a company from Georgia? Yeah, listed on a European stock exchange. I would not. And here's why. I need to really trust the accounting and feel comfortable with the accounting as well. Now, Georgia is not Russia, but I will say one thing about Russia. Back in, I think it was 2007 or so, I invested in Lukoil and Gazprom, okay, two big energy companies in Russia. And one of the reasons I invested is because like, oh my gosh, it's so cheap. It's only trading at like 3 times my earnings estimates. Well, those earnings estimates were fraudulent. I don't trust it. So what would make me want to invest in a company from Georgia? And again, I'm not saying that Georgia has fraudulent accounting at all. What would make me give me more comfort and assuage my fears or concerns would be if it was duly listed in the United States, meaning ADR. ADR standing for American Depository Receipt, so that it could file 20Fs, which is the international version in the U.S. markets of a 10K. Yeah. All right. Next question is, some small, and micro cap companies are audited by BDO, including Supermicro. Are they reputable enough? Yeah, it's a tough call. All right, so here's how it works. I never want you to invest in any company, okay, unless it's audited by the big 4, okay? And those are as follows: Deloitte, Ernst & Young, PwC, KPMG. And what an audit means is they bless the financial statements. Now, the way it works is when you file a 10K, meaning an annual report, what happens is the auditor usually blesses the financials. And I have a course on this as well, where you analyze, it's so funny you mentioned Supermicro, where you analyze the audit statement and the financial statements here as well. Now, if the auditor doesn't bless the financial statements, okay, if they don't bless the financial statements in the annual report, okay, then don't invest. It's not worth it. Now, let's talk about BDO. So I told you there's big 4. The 5th one is BDO. I don't think it's reputable enough yet for me to feel comfort doing that. So what happens usually is, and there's only maybe a handful, if any, companies in the S&P 500, maybe 1 or 2, that BDO actually audits. But what's happened historically is if one of the big 4 says, I don't want to audit you anymore, right? Which is actually, I think, what happened with Supermicro. Then BDO will say, what about me? I'll do it. Okay, and so that happened with Lululemon, BDO, Lululemon, Supermicro, and a handful of others. Yeah, and whenever you're doing investment research on companies globally, if they don't have a reputable auditor, don't invest. Okay. All right. Next question is, small cap companies are not that liquid. What is the minimum liquidity for you in order to consider investing? Yeah. So what I would say is this. You never want to own more than 10% of the average daily trading volume. So if you go to Yahoo Finance and type up mini ticker, you want to look at the average daily trading volume and divide it by 10. Don't buy more than that amount. And the reason I say that is because illiquid stocks own you in a down market rather than vice versa. And a lot of hedge funds went belly up in the fall of 2008 when we were within 24 hours bank machines not working. And one of the reasons is they got so many redemptions from their funds. And they had to sell. They had to force sell everything. And they own a lot of illiquid crap. The bottom line, don't ever own more than 10% of the average daily trading volume of a stock. Okay, next question is, what criteria should meet a company so you start the 100-step process? Yeah, and you're referring to, I think, this spreadsheet right here, my 100-step process in doing investment research. Yeah. So, I mean, I always start by looking at the management team, but I know your question is, how should I filter? Yeah. So what you want to do is this, okay? You take a step back and you think about the sector you want to invest in and ask yourself this one question. Will this sector that it's in be more relevant or less relevant than it is in 5 years than it is today? Then you start doing a little bit of research. Well, how do you screen these companies? Well, you can always look at ETFs. You can go to etfdb.com, that's etfdatabase.com, and you can look for themes. For example, let's say you start looking through themes and you're like, whoa, this rare earths ETF looks really exciting to me. And I think rare earth is going to be more important in 5 years than it is today. For obvious reasons, I can go there if you want me to. Then you look at the components of that rare earth ETF, the holdings. And then you start doing investment research on those companies. Yeah. Another thing you want to look at before doing investment research is, of course, liquidity. And you never want to invest in a company where the founder is no longer involved. Yeah. And there are exceptions to that, of course, but it's just my thesis. Because that's what a company is. You're investing in people, eh? Okay. Next question is, if a company has 0% growth and its PE is 10, if 15% growth is 17, okay, yeah. So let me explain valuation and how to know what the right value is for a company to invest in. Okay. So what you're going to do, using my templates or anybody else's templates, I don't care, is you're going to forecast the income statement. Okay, so what you always do is you start with revenue. Okay, forecasting financial statements is easier than you think. You forecast revenue, you look at historical trends, forecast the future. Then once you forecast revenue, most of these red items here become a percent of revenue. Okay, ignore the yellow depreciation, it's not cash based. Then you're going to get net income. Okay, all right. Now, what you do is you look at your net income estimate 5 years from now. And you're going to get earnings per share, which is net income divided by number of shares. And you want to look at the growth of earnings in order to value the company. Now, let me take a step back and explain valuation from a high-level perspective. You never invest in companies based on this year's earnings, PE, or next year's PE, or even the year after. You always look 5 years out. Now, the S&P, historically speaking, has an average price-to-earnings ratio of about 15 times. And the S&P 500 has an average earnings growth rate, average over time, of about 15%. So PE of 15 divided by 15. That means price earnings to growth rate of 1. So if a company in the S&P 500 has earnings growing at 20%, it will probably trade at about 20 times. Conversely, if a company in the S&P 500 has an earnings growth rate of 11%, it'll trade at 11 times. Now, with that in mind, the smart money, the way you want to do this is you want to forecast your earnings per share, meaning net income divided by shares, over 5 years. So let's say in 5 years. In 5 years, you're forecasting $1 in earnings, $1. And if between year 4 and 5, you've got 20% earnings growth, that means that in 5 years, the company you're doing investment research on should trade at 20 times that $1, meaning a PE of 20. That is your price target. Now, I want you to be very long-term focused when you invest. The longer the view, the wiser the intention. And I always want to tell yourself this. I can always buy it cheaper because FOMO will destroy your portfolio. And I also want you to tell yourself this. I don't know the path, but I know the destination of the stock after you complete the 100-step template I showed you. Okay? I want you to be long-term focused. And I don't want you to give a damn of what valuation is today, tomorrow, next year, last year. The smart money looks out 5 years. And even Warren Buffett, you know, he bought Coca-Cola around 1990, which he still owns today. Sorry. And whenever Warren Buffett buys a stock, he always tells himself, I'm assuming the market's going to be closed for at least 10 years, so we can't sell. That way, you're not a tourist. You're not renting stocks. You're long-term focused. And we've all made the cardinal sin of selling a stock that we own because the chart looks like this. But today, it's up here. We've all done it. So I want you to be long-term focused with everything, okay? Don't check quotes daily either. And day trading is gambling. Okay, next question is, how do you calculate downside risk? Yeah, so upside, obviously you want the risk reward to be positively skewed. So in the example I just gave a minute ago, my target price is 20 bucks, right? So what's the downside? Well, what you can do is you can look at the relative strength index, or more importantly, you can look at moving averages or support levels. Okay, so if the stock is 10 bucks right now and I see upside to 20 bucks, that's 100% upside. And if I see downside of 20% to 8 bucks, then the reward minus the risk is 100 minus 20, it's 80%. And that $8 could be a support level. It could be the 200-day moving average, 50-day moving average, etc. Yeah. Okay. The next question is, do you think there's a difference between wanting to become rich versus knowing what it takes to become wealthy? What does wealth mean to you? Yeah. So first of all, I don't respect somebody because of the size of their wallet. Wealth for me means happiness, a wonderful family, enjoying every single day, not worrying as well. That's what wealth is to me. Now, what I do is, in the past, I've gone to the prison system. Yes, I've been to jail, folks. At the McGuire Correctional Facility in Redwood City here in the Bay Area. And I help a lot of inmates, right? These poor kids that are 20-something-year-olds that, have deadbeat fathers. There's no such thing as a deadbeat mother. And what I always do is I ask this question, okay? And I'm going to ask you guys this. Do you believe in God? Does God believe in you? Well, if you don't believe in yourself, then you might have to question your faith, which we're never going to do. Wealth to me means somebody that is happy every single day of their life. And if you worry about things outside of your control, I humbly believe you're questioning your faith, which we never want to do. God always knows what's going to happen, folks. Remember all those times you worried about crap way outside of your control and everything worked out fine? Don't worry. Keep your head down, work hard, everything will work out. And you might not understand this today. You might not understand that I don't understand why I failed. Why did I get let go? Why did this happen to me? Don't worry. Years later, you're going to look back and say, thank you, God, because that guided me down a different path in life. And when life gives you lemons, you want to be you want to make lemonade. And I want you to think differently too. So Wayne Gretzky, I'm Canadian originally, proud, but Wayne Gretzky, he was successful not because he skated where the puck is, but because he skated where the puck is going to be. I want you to think that way as well. When something bad happens in your life, career-wise, or something bad happens to your net worth because the markets are crashing, I want you second. Testing. If I missed answering a question because of the stupid internet issues, let me know, please. I think we're good. Okay, great. All right, we're back now. Okay. All right. So what happens on an earnings call is this. First of all, the CEO speaks, said we had another great quarter, even if they didn't. Then the CFO speaks and says, here's the numbers for the quarter and here's guidance. Sometimes they say what's coming next. And then they take questions. Now, the questions are from Wall Street analysts, and it's crucial that you listen to that because that represents the drivers or issues that investors are most concerned about. Okay. All right. So sorry about those issues, but thank you, Elon. We're now on backup, which is Starlink. Okay. Next question is, would you invest in a company with a market cap of less than $300 million, or do you stick to above? Yeah, absolutely. My favorite investments are ones that are 5x5s. What does that mean? What that means is a 500% upside within 5 years. Am I often wrong? Yeah, most of the time I am. But if I'm right and it's only up a couple 100% or up 700%, right, which happens sometimes, broken clock is right twice a day, then I'm happy. That's what I want you to do. If you forecast financial statements, you do investment research, and you see only 15% upside per year, don't waste your time buying the stock. Buy the S&P 500 instead, ticker VOO. Why? Because you've got diversification amongst 500 stocks. Okay. Now, I would not invest in a company with a market cap of less than $300 million if it's really, really illiquid. And as I said earlier, only invest in companies where you're not buying more than 10% of the average daily trading volume. Okay. Again, I am sorry about the buffering issues before. I switched over to Starlink. Yeah. And by the way, SpaceX, this is unbelievable. 90% of the weight in pounds of every single thing put into space is sent up by Elon Musk. Unbelievable. Yeah. Okay. I wish I could invest in that company. It's private, though. All right, next question is, if you bought Amazon in 2020, you would have a very small return, although it did hit an all-time high. It went like this, down here, up to here. Yeah. How do you decide when to exit? Yeah. Yeah. And around that time, Jeff Bezos started stepping away a bit to focus on space stuff. I always want the CEO, founder, to be fully involved. When do I decide to exit? When something changes in the thesis, like if the founder resigns, or if the stock hits my target price, etc. Yeah. Okay. And let me hit refresh here. Again, I do apologize, guys, for the internet issues. If I was halfway through answering a question that didn't come through, please let me know. I'll repeat it. Thank you. Okay. When you make a valuation on a company and you try to guess the price in 10 years, how does the current PE affect it if it's now 300? Is it supposed to shrink? Correct. Yeah. So when you're forecasting financial statements, right, you're going to forecast revenue, the income statement, and other stuff, okay? And then you've got net income, right? And then you've got earnings per share, which is net income divided by number of shares. So if, as you look at the PE, price divided by earnings per share, it should be going down over time, okay? And then, as I mentioned earlier, you want to value the company based on your earnings estimates between years 4 and 5. Yeah. And then slap on a P multiple. Okay. Okay. Next up, Peter wrote, hey, Chris, hey, bud. Would you agree that many investors treat REITs, meaning real estate investment trusts, as bond substitutes, forgetting properties they hold are often highly leveraged? What would you look for to tell how highly they're geared? Yeah. I don't know too many investors that look at REITs as bond substitutes. So for those of you not familiar with REITs, it's a way of buying real estate, but it's like you're buying a stock, a ticker. And by law, these companies have to pay out about 90% of their profits in the form of dividends. And that's why you see with REITs very high dividend yields. Now, I want you to be very, very careful, okay? Don't ever invest in a REIT or any company that has an insanely high dividend yield, like over 20% or something, for a couple of reasons. Number one, the data might be wrong, so you have to always read the investment offering memorandum or the filings at sec.gov. Or number two, the market is telling you that that dividend is not sustainable. Or number three, it was a one-time special dividend. Okay. All right. Next up, Manas, I wrote, good morning. How are you? Yeah, and then you asked a question about Michael Burry, which I answered earlier on. And then you wrote, now that Buffett the legend is gone, he said he would remain silent now, more or less. Why and what could it mean for a new breed of investors? Yeah. So for me, I don't ever invest in a company when the founder is no longer involved. So, I've owned Berkshire a lot in the past, and I used to use it as a plug when I'm not sure where to put my money. I would just throw in Berkshire, right? But now that Buffett is stepping away, I think towards the end of this year, I'm not a fan. Yeah. It's kind of like saying, would you invest in Tesla if Elon Musk retired? No way. Okay. If you, with 35 years of investing career, had one advice for me who's going to be 23 next month, what would it be? Just one piece of advice. Take your time, please. Yeah. Always invest in the jockey first and the horse second. The management team is always more important. And when I worked in venture capital for years, what we would always say is this. We'd rather invest in an A management team with a B business model instead of a B management team with an A business model. The jockey's always more important than the horse. Yeah. Okay. How bad could the AI bubble be if it blows off and we're in the 06 time of the recession Yeah, you can't time this stuff. And that's one of the reasons Michael Burry probably just shut down his fund, according to SEC filings on November 10th. You can't time these things. It's impossible. And I remember back in 2006, I worked at a hedge fund called Pequot. And I think it was July of 2006 when my team, we were pitching housing shorts to Art Sandberg. God bless me, passed away. He was the founder of Pequot. And our thesis was on these housing shorts, KBH, as well as Lennar, ticker LEN, that we were in a bubble. And I remember what he said. He said, son, I've been around long enough to know never to stand in the way of insanity. Markets peak, markets trough, you can't time it ever. So I don't know. Nobody knows when this market's gonna, the bubble's gonna burst. It might be because of a black swan, great book by Nassim Taleb. A black swan is some event you can't forecast that pops the bubble. It could be COVID. It could be like a 9/11, God forbid. You can't time it. And that's why you have to be very long-term focused. Don't try to day trade these markets. Just tell yourself this. I don't know the path. I know the destination of the stocks you invest in. Yeah. You'll sleep better at night too. Okay. Malcolm wrote, where do you think the healthcare sector is headed in North America? Is AI the enabler it needs to prosper over the next 5 years? Yeah, it's a wild card, what Kennedy is going to say in terms of regulation in that sector. I have no idea. So I don't look at it that way. I always look bottoms up. Now, in terms of AI with healthcare, what I think is going to happen is this. Okay. And AI is incredibly positive for the markets. Here's why. Okay. So you want to make this as big as possible, of course, net income, okay, for earnings per share. Well, if in healthcare they start using more R&D with AI and hire future people to do, future scientists do R&D, this is gone. It drops right to the bottom line. Okay. In healthcare, if customer support, which is usually put in G&A, is done with AI, it drops to the bottom line. Okay. If sales and all these commercials you see on television that make you feel really warm and fuzzy, these healthcare biotech drug commercials, if that stuff is created by Sora and not agencies, marketing prices go down and sales as well. Drops to the bottom line. Okay. If production is optimized through AI, and this is ridiculous, I know, then cost of goods sold goes down, not to zero, which drops to the bottom line. So AI is a wonderful positive catalyst, in my humble opinion, for stocks because it helps to cut expenses materially. Earnings per share goes up a lot. As long as you don't assume multiple contraction, then stock prices go up a lot. And I think because of AI, the average return on the S&P 500 over the next couple decades is going to be 15, maybe 20%. Okay. There will be massive down years too. Do I care what years? No. Because as I said before, I don't care about the path. I care about the destination. Okay. Why does sometimes the market cap of a stock is lower than revenue? Yeah. It means that investors don't have much confidence in the company. Yeah. And what it also means, right, it's very rare for companies to trade at less than a price to revenue of 1 times. It also means that activist hedge funds, as well as private equity firms, might be looking to buy a big stake in the company to turn it around. Yeah. And I can go into much more detail on that if you want me to. Yeah. But it usually comes down to a less than stellar confidence in the management team. Yeah. All right. Hey, Jamin, good to see you as well. Okay. Next question is Meta removed $30 billion of debt from its balance sheet through a special purpose vehicle, SPV. Why are they hiding the costs of AI? And how good or how bad could it be long-term for Meta? Yeah. I wouldn't read that as a negative at all, okay? Because everything is going to be disclosed in the annual report anyway, the 10K by law. And the reason you don't just look at the 3 financial statements in a nutshell, meaning the income statement, balance sheet, cash flow statement, is because if you look at the footnotes in the 10K, by law, they have to disclose how much money is coming due debt-wise in the next 5 years and thereafter. And the only way to find that out is to analyze the 10K. That's why you can't just look at the balance sheet, okay? And the way to analyze the 10K, and Manos, you're in my programs, I want you to take the forensic financial statement analysis using AI product here as well. And you'll see here in the footnotes analysis, when you look at debt and leases, you'll be able to map that out as well. And if you have questions, please let me know. And because you're a premium customer, I'll see you today at 10 a.m. Pacific time, and we can walk through the financial statements together from sec.gov. Yeah. Okay. And if anybody wants to join my program, go to the chat or go to the description of this video and click the link to set up a call with me. Not with my team. It'll be with me. It's always fun to talk to my students. Okay. What is the moat, and what companies have it in tech and non-tech space, if you could describe it? Yeah. So what you're talking about is what Michael Porter refers to as a competitive advantage. Okay. And you'll notice that a lot of hedge funds are kind of named after castles. You've got Fortress, you've got Citadel, etc. And if you think of a castle, right, you've got maybe a bit of water around it to protect it. And moats are usually in the form of first mover advantage, so they have high market share, intellectual property, meaning copyrights, trademarks, patents for drug companies, etc. So that's what I would look at. And sometimes exclusive contracts with government agencies, etc. And the only way to understand what the moats are is to read the annual report, or what you can do is you can look through the S1, which will explain what the company does and what the barriers to entry are. Yeah. But the best investments, I think, are platforms. Okay? Think of it this way. Like Apple is a platform, and they charge the cars, which means 30% of, I don't know, every single app you pay $1 for, they get 30% in that platform. LinkedIn is, the quintessential HR platform. Ethereum, which I own, is, a crypto platform as well, because most ICOs, meaning IPOs for cryptos, occur on that platform. And most NFTs, which nobody's talking about anymore, are done on the Ethereum platform. Yeah. Platforms kill. Yeah. Okay. Do you think tokenization of markers? Yeah, I don't understand that question. Sorry. Yeah. Okay. Okay, Jaming wrote, I'm building an affordable setup to stream accounting content. If I only use my computer's built-in camera, will the quality be good enough, or is an iPhone camera a better choice? Yeah, so I see you on my daily calls. I think your camera is perfect as is. You're a premium student of mine. So why don't we do this? On the daily Zoom calls I do with you and everybody else, I will optimize your Zoom setup for you. Now, and this is for everybody, when you're doing a Zoom call, right? A great Zoom setup will do more for your career than a great Italian suit will. So here's a couple of tips. Okay, number one, okay, you want to make sure that your head is about 2 fingers from the top. And you also want to make sure the camera's at eye level. If you do those 2 things, you come across as more confident. You don't want the camera to be down there because it looks like you're looking down at people. You don't want the camera to be up there because it's arrogant to look over somebody's head. You also want to make sure that you've got a light on each side here, okay? And then make sure that the light is that you're 5 feet ahead of the wall behind you, so you don't cast shadows. That light you see right there is from my headlight up there. And if you angle the lights on each side, then what happens is the shadows go back there and over there. And you can also use a light behind you. I use a special light where I can actually change the color and all that crap as well. Yeah, I don't like the color. I like blue. Yeah, yeah. And I can help you with audio and many other issues as well on today's call. Yeah, all right. Okay. Do you ever recommend using credit cards for almost everything? A lot of people are in favor of credit, but I've always been weary of it. Yeah, as long as you pay back before you're paying fees. But I think that everybody should have a credit card, and here's why. Because it'll help you build up a credit rating. Now, if you're younger, you're just getting started out, and you don't have a credit rating, right? And you want to buy a house eventually. Here's what you have to do. Get a credit card, obviously pay it off on time. And every 6 months, call the credit card company and say, hey, can you increase how much I can put on my credit card now? And if you do that over time, and if you pay off your bills on time, you'll build up a really good credit rating so you can do the most important investment you'll ever make, which is buying a house. And when you buy a house or an apartment, you want to make sure you always put down 20%, okay? And what you can always do, and this is only available on my website for my clients, what you can always do is you can write a business plan for the house you want to buy. And I ask you tons of questions about the house. And then what happens is a one-page executive summary is made for you, as well as a business plan. This works in every single country. This is one of my houses. I own investment properties in Canada. Yeah. But the richest people in the world own lots of real estate for a couple of reasons. Number one, it goes up in value over time. Number two, you can deduct the depreciation. Number three, you can deduct the interest. And the reason that's important is so you pay less in taxes legally. And I remember back in the first televised debate between Hillary Clinton and Donald Trump, and I did not vote in the last election, by the way, but in the first televised debate between Clinton and Trump back in 2016, Hillary said, it's not fair, you're not paying taxes, what's going on? And Trump was very transparent. He said, well, of course, because I own a lot of real estate. The richest people on the planet own tons of real estate, and it's always my dream for my clients, all my students, to make more money in 10 to 15 years from their real estate investment holdings than they do from their primary base salary. Yeah. Okay. What professions or jobs are AI immune as of now? Like, what degree would do well? Yeah. So Jensen Huang, the brilliant CEO and founder of NVIDIA, said the worst thing you can do right now is study computer science because AI is made to eliminate that role, or at least augment it. And I'm on the front lines here in the Bay Area. Every week, I see thousands and thousands of people getting let go, mainly entry-level developers because of AI. It's happening all the time. So what are the best professions? Well, the money right now from a private equity perspective is going to anything that AI can't touch. Like a good buddy of mine here in the Bay Area, he just sold his plumbing company for $40 million because AI is not going to replace plumbing. One day a robot might, like a Tesla robot, I don't know. Other professions are, if you're an electrician, a hairdresser, etc. But the best profession that I think is safe is a sales position. Direct sales, where you own that relationship with the client. Because people don't trust AI. I don't trust AI. I trust people. And so for those of you that want to safeguard your career, I want you to get into sales. And by the way, CEOs, they make CEO because they're great salespeople. The same thing with entrepreneurs. They're great salespeople. And if you're in a company right now and you work in sales and you're about to get promoted, make sure, please, that you still have those relationships, like you're still doing sales. Otherwise, you could be terminated. Yeah. Okay. The current administration, I guess the Trump administration, added another $3 trillion of debt in just 11 months of being in office and still have another 3 years. I'm not worried at all. But will you be stoic as of now if debt reached a high level? Yeah, I'm not worried. I'm not worried because The biggest power the United States government has is this. Love it or hate it, this is the world's reserve currency. In 2008, when we were within 24 hours of bank machines not working because of what happened in the United States and due to American banks, this went up in value. This is the world's reserve currency still. And the very last company on the planet that will ever go bankrupt is the U.S. government. It is what it is. And the United States was set up to be the lender of last resorts. Now, when will I change my mind? Probably not in my lifetime. But I might start thinking about it differently if investment bankers and private equity folks and hedge funds start using a discount rate, risk-free rate that is not U.S. Treasuries. It's all relative. It's all relative. And I've even noticed, and if you want to learn more about this, I just published a blog yesterday, actually, on my thoughts on cryptocurrencies, how to do investment research on cryptocurrencies, and Chinese government debt sales in the United States. So the Chinese government is slowly selling U.S. Treasuries. You can see it on a monthly basis if you go to treasury.gov. But United Kingdom and Japan, who are becoming even better friends with America now, are buying more. If China were to no longer invest in U.S. Treasuries and no longer invest in the U.S. economy, I think there would be chaos in China. Because China, for now, is still an export-oriented economy. They're more reliant on the U.S. than vice versa. And they know it. Yeah. Now, I'm a very big proponent of globalization because if we all get along, then there's less tension globally. Okay, give me 1 second. So Rob wrote, why did Michael Burry in Scion Asset Management, which he closed on November 10th, which had about $130 million in assets, why did he go after Palantir? Because he thinks it's too expensive. It's the same thing why he's short NVIDIA, right? He just capitulated and shut down his fund because he's like, dude, I don't get it. Valuation too high. And remember, one data point doesn't make a trend. He was right one time in his life. Right? Rightly so, he killed it. He killed it by going short back in 06, 07, leading up to 08. He was really early. And yeah, he's really early right now, maybe, with trying to short Palantir as well as NVIDIA. Now, the reason why, and I know a lot about Palantir, I invested in it when I worked in venture capital. We partnered with Peter Thiel's firm, Founders Fund, to invest. And I still own it now. Yeah, do your research first, please. Yeah. But the reason why Palantir and NVIDIA are at nosebleed levels valuation-wise is because AI is the hottest new shiny toy, and there's really not many investable plays in AI, especially software. Like, what can you invest in that's AI in software? Well, Palantir, maybe Oracle, because, you know, AI is based on data. Where's the data come from? Well, it's stored in Oracle databases. Yeah. All ships rise at this point. But it's hard to time these markets. That's why you got to be long-term focused always. Yeah. Yeah. And it really hurts when you shake the hand of the CEO of Palantir. He holds a hand. Holds hard, man. I've heard that Bitcoin blockchain cannot evolve to quantum computing because the upgrade has too many technical discrepancies. Does it make Bitcoin irrelevant in the next computing paradigm? No. So Bitcoin has first mover advantage, sort of, in cryptos, and it's kind of thought of as digital gold. And as I mentioned earlier, only 15% of ownership of Bitcoin right now, and cryptocurrencies in general, is institutional investors, meaning non-retail. I think that will go up to 50% within 5 to 10 years easily, which justifies my $1 million Bitcoin price. And for more details on the exact mathematics of that, how I justify that target price, you can go to my latest video on YouTube to see my cryptocurrency vlog. And it's based on, I'm going back to billions, right? So it's based on season 3, episode 7. I'm working on season 3, episode 8 now. I want to do the whole series, I think. But it's going to be hard doing the seasons when Axe is no longer involved. And in real life, God bless him, Damian Lewis One of the reasons he wasn't involved, his wife passed away. God bless him. Yeah. All right, next question I got here is, speaking of Bitcoin, my local broker site, IBKR, refuses to allow retail investors to invest in Bitcoin ETFs like IBIT as they're speculative. Do you have to get permission to be approved? Do you think this will slow adoption? Yeah, there's tons of places where you can buy Bitcoin ETFs. Just do a search, maybe ChatGPT it. If your local broker doesn't let you, then what I would do is I'd open another account. And for those of you overseas or any country in the world, doesn't matter. If you're not sure how to buy stocks or how do I get the cheapest commissions, what you do is this. Just do a search on the 5 biggest banks in your country, call every single one of them, and then, ask, transfer me to your stock investment department, ask what are your commissions, and whatever the lowest commissions are, go with that one. Yeah. Okay, Matthew. Hey, Matthew. It's my son's name, too. Matthew wrote, what's your take on the president's latest interview regarding H-1B? Some say H-1B will be going away. Others say it'll just slow down. Yeah. So I always want, like my dad taught me this. He said, don't focus on what Trump says. Focus on what he does. Okay? And he's pretty extreme when he negotiates. Now, usually when 2 parties negotiate, party A says, I want this. Party B says, I want this. They meet here. With Trump, it's different. He says, I want this. The other party says, I want this. They meet here. Yeah. And there's enough checks and balances in place in the United States to stop any sort of cray-cray extreme legislation from passing. Now, I have a lot of clients at H-1Bs, and I was on an H-1B for years before I got my green card and eventually citizenship back in 2007. These are scary times, right? But initially, about a month ago or so, people thought the new law was going to be, you can't, if you're on an H-1B, your company has got to pay $100,000 right away for you to keep it. Then it kind of changed to, well, if you're not in the United States having H-1B, maybe it'll be $100,000. We don't know what's going to happen with respect to the appeals court, et cetera. Yeah. But I know that this country, America, was founded on immigration. Sergey Brin, is from Russia. Elon Musk is from South Africa. Pierre Omidyar Ibet, he's from Iran originally. And 50% of all engineers here in the Bay Area and founders were born overseas. So I don't think it's going to get that extreme. Yeah. Okay. I have faith in the system. All right. And Matthew wrote, I agree with you regarding Michael Burry's fund. He was wrong 80% of the time. Luis wrote, why do you want to help a bunch of us? Why not keep all the secrets to yourself? I don't know. I like doing this. I enjoy it. Yeah. And when I work for other people, it was really uncomfortable every year when it was my annual review time. Because my boss would always say, Chris, you're doing a great job. You're adding a lot of value, making the firm a lot of money. People like working with you. You're fun, good team player. But can you spend a little bit less time helping people in other departments? This is what makes me happy. I like to teach. I love it. And I humbly got awards for this as well. Let me see if I can show you one of them here. I got this one here, which is broken now. Let me show it to you here, actually. So this is the first mentoring award I got in my career. It's Canadian. I don't know if you can see that. It's Outstanding Buddy or Mentor or something. Very Canadian award. Yeah, I just like it, man. I enjoy what I do. Yeah. We're here to serve others, always. Yeah. Oh, here it is here. Yeah. And this is a great book here. It's by Adam Grant. It's called Give and Take. Don't read it. I'll summarize it for you. The richest people in the world, which doesn't mean I respect you, but the richest people in the world, the top 1%, they're givers. They like helping people. Give and you'll receive. It's prophetic. It's been true since the beginning of time. And if you mentor people, when one teaches to learn, and you're reminding yourself of your DNA subfabric of success. Yeah. All right. But money's not my motivator. Yeah. I'll show you who I am. If you make money your God, you'll never be happy. Okay. So I'll show you what I do here if you're curious. All right. So what I do with my money is I build schools. So I'm currently building a school for girls with one of my students in Kenya. I'm paying for every penny myself. A couple of years ago, I built one in Rwanda with one of my students as well. Of course, they were hit by the genocide back in '94. So I'm building 1,000 schools like this one here in Rwanda. That's my son, Matthew. Dude, it's hard, man, carrying this water uphill. And a lot of these kids, they actually don't even wear shoes when they do it. We put solar on the roof as well. That's us cutting the ribbon. But yeah. But I really believe that education, as Nelson Mandela said, education is the most powerful weapon that we can use to change the world. And Malala, who I respect tremendously. Somebody's got to make a movie about Malala, man. But Malala once said, with guns, you can kill terrorists. But with education, you can kill terrorism. We all have a higher purpose, higher calling. All right. We're here to serve others. Did you ever read Rich Dad, Poor Dad? No, I haven't. My son read it. He likes it. That's Kiyosaki, I think, right? Yeah. All right, next up, Terror Bear wrote, hey, Chris, I'm preparing for a networking session in an industry I'm looking to transition into, and I really appreciate any advice you have. Yeah, absolutely. So what I can do is I'll give you this book for free. It's called Networking to Get Customers a Job or Anything You Want, and I'll show you where to download it from. Anybody can download it on this website. So we're going to go here to, let's go to Haroun ventures.com. And then once you're on this website, just scroll down to the bottom. And then just, you can download the book right here. And then you'll see also, I think I'm covering it up at the bottom of the screen here. There's a meeting, a button that says book a meeting. You can click on book a meeting with me if you want as well. Yeah. All right. Okay. Do you have any tips on how to make the most of a networking session? Any tools or website you recommend to better understand the industry landscape, whatever industry it is? Yeah, a couple of things. Number one, if you can get a list of people that are going to be attending the event from the organizer, go to their LinkedIn profile to learn more about them, to find one thing you have in common with them so you can chit chat with them. But don't let them know I was stalking your profile and I learned you also like baseball. Also, go to their Instagram profile to see who they follow. They follow athletes, and you love sports. That's something you can talk about as well. Don't make it obvious, though. Yeah. And then get business cards, too. And I'll show you where to get business cards from, the best ones. It's really simple. Okay, so I want you to stand out and be different. And I'll put this in the chat in a second, okay? So you're going to go to moo.com, and then you're going to go to business cards, and I'm going to show you which ones to get. Okay. Here it is here. I want you to get the mini business cards, environmentally friendly, all that stuff, but it helps you stand out as well. Yeah. And maybe you start off with this here. You got to decide, is this person worth 21 pennies? Yeah. All right, so let me go here. And then the reason you want to get business cards, I know it's old school, is you might be meeting older people that have business cards. Plus, if you pull your business card, you'll get theirs. And then you're going to immediately add them on LinkedIn and send them a message that night saying, John, pleasure meeting with you today. I enjoyed our conversation, period. Please let me know if you have time for a very quick Zoom call. Thanks a lot, your future boss. Your name. Do you calculate Sharpe ratios, expected return, standard deviation, etc. before you invest? Do you use these at all or simply forecast revenue? Yeah. So standard deviation, expected returns. I use a lot more statistics when it comes to options. Sometimes we use Monte Carlo simulation. Most of the time I'll use binomial option pricing theory. which means I have 10,302 calculations in a single spreadsheet to calculate the value of an option. When it comes to Sharpe ratio, dude, I've never understood that stuff. I know it means, given the amount of risk you're taking on, how much you outperform the market by. A higher number is better. 2 is you're a rock star. 1 is like, eh. But I just don't get it. It's kind of like the DuPont model for me, disaggregating ROE. It's just, for me, I don't get it. And it's kind of like IRR. I sort of get it, but I kind of don't. So I don't use it. So for me, I keep it pretty simple. I like to forecast financial statements to be able to target what my earnings per share estimate is in 5 or 10 years, and then value the company based on that. Yeah. All right, Tado wrote Lego, smiley face. I like to teach with these things. One of the reasons I do this, and one of the reasons I do what I do also is when I was younger, I went to school in Oakville, Ontario, Canada. Oakville. And they thought I had a learning disability. They wanted to fail me in the 6th grade and the 8th grade. And they sent me to a learning disability center on Lakeshore Road in Oakville called Chisholm. And it killed my confidence. And I worked 10 times harder than everybody because I thought I was dumb. And I remember when I got my job at Goldman Sachs, I thought they made a mistake in New York City. And I remember at first I didn't say anything. I didn't say anything because I thought, if I say nothing, they'll think I'm dumb. But if I say something, they'll know I'm dumb. What does this have to do with Legos and me teaching? Well, the only thing I remember from school when I was a kid are the props that people brought in or the teacher brought in. That's why I use a lot of props as well. And I believe the purpose of a teacher is to build your confidence. Okay, and I teach you stuff as well. And I try to make it fun. But the purpose really is to help you, I don't know, build up confidence. Because with confidence, you can do anything, man. Anything. And when I worked in venture capital here in the Bay Area, many years ago, during the evenings, I would teach. And I was a professor. I won Professor of the Year at one of the universities I taught at here during the evenings. And I realized something. I realized that American students, and keep in mind, 50% of my students were born overseas. But American students, for some reason, American students are number 1 in the world in the most important economic category that nobody talks about. And that's confidence. And with confidence, you can make something boring like cloud computing sound awesome, like Mark Benioff does. And with confidence, you can make any product sound awesome, like Sir Richard Branson does. He's one of my heroes. And with confidence, it leads to perceived competence. And that's my role. My role is to help you be confident in what you do so you're happy. My role is also to make you confident in what you do so you're not judgmental of yourself. Okay? So imposter syndrome goes the fuck away. And I mentioned this before, it's important to me. This is a chart that will change your life. This axis is your age. This axis is give a damn. When you're younger, you're down here. You don't care what people think. When you're older, you're up here. You don't care what people think. The problem is, when you're teenagers, 20s, 30s, 40s, sometimes later, you're up here. And I want you to eliminate this triangle of despair at all costs and live at this level like the happiest people in the world do and the most successful too. Because if you're up here and you care what people think, you're going to be so focused on other people's approval that you're not going to execute. You're going to be distracted. Like, imagine a professional athlete like Shohei Ohtani, okay? Or Michael Jordan, who's better than LeBron James, kids. Imagine if they were playing and there's millions of people all over the world watching, like 26 million people watched the World Series Game 7, which had a tragic ending. But imagine Shohei Ohtani up to bat, and all he's thinking about is, oh my God, are people judging me? What do they think of me? He's not going to execute. And so what you got to do is you got to tell yourself, like Michael Jordan does, I failed over and over again in my life, and that's why I succeed. Because as Mark Cuban said, you only have to be right in business one time. But you got to tell yourself, I don't care what people think. Yeah. Okay. Tony wrote, hey, Chris, can you go into detail about change in fair value of contingent acquisition liabilities? Why does the number keep increasing and decreasing, even it's been a year after its acquisition? Yeah, so what I would do in that case, you'd have to be more specific and give me the exact example, but it could refer to the way that mark-to-market accounting is done, right? And valuing lease obligations, etc., or off-balance sheet stuff like pension obligations. And the best way to find all that stuff is to look at the 10K and then look at the footnotes. Now, I have a product that can help you with that as well. It sounds like it's a very advanced question, way above my pay grade. So what you can do is you can take my forensic financial statement analysis course using AI. And what you're going to do is you're going to enter in the name of the company right here and the ticker. And then you're going to select your AI prompt level. I usually choose my maturity, which is about here. Then you're going to go over to footnotes analysis and you're going to look at all of these items right here, especially debt and leases. You're going to copy and paste this AI prompt, as I mentioned in the course, to significantly help you to assess that contingent liability. I hope that makes sense. Give me 1 second. I am having buffer issues again. Let me go here to internet speed. I live in the technology capital of the world, and Comcast sucks. But right now I am using Starlink. I have 3 internet service providers, just in case one goes down. Starlink, which is up my roof. Download speed is that. All I care about is upload speed being at least 10 megs. That's fine. Maybe it's a YouTube issue. Okay, I'll stick with that for now. All right. Okay, next question from Manas is, assuming that we're in a bubble and the bubble grows for another 2 years, do you think S&P will hit 8,000 or 9,000 or even NASDAQ 30,000? I don't know. But what I do know is, based on my investment research humbly on my stocks, I know the destination of the stock price longer term, target price, but I don't know the path. Okay. And also keep in mind that the United States government has printed so much cash, right? And so the global M2 supply of money is now $96 trillion. You know, in COVID, it was 90 trillion. And so if you estimate that governments are going to increase this by 5% every year, the value of this is going to go down. So they're basically forcing you to invest in anything other than cash because cash is trash. Yeah, that's why I'm a bull on Bitcoin as well. Okay. All right, Indigo Kid wrote, I have a business idea where I would take young high school graduates and those even younger and then guide them to get their bachelor's degree online in about 6 months to a year. Is this good? I would write a full business plan first before you do that. There's a lot of government regulation too when it comes to that demographic. And the way you can do that is as follows. Okay, so I've got here a venture capital bootcamp spreadsheet. And as part of the programs I offer online, I've got a venture capital bootcamp as well. So what you're going to do is you're going to join my venture capital bootcamp, which is about 15 hours, write an incredible business plan, focus mainly on the financial statements, okay? Then print out your business plan as well as your investor slides. Yeah. Okay. Next question is, are we being too dependent on artificial intelligence and these models that feel like human? I mean, I'm scared for Gen Alpha now, who are immature mentally and emotionally. Yeah. I know what you mean. I think it's going to impact our cognitive abilities, that's for sure. Yeah, and that's why you got to unplug at least 1 day a week. No technologies. But where I see the market going, especially what I do, is I think people are going to be lonely and starved for human interaction. And so I think the future of education is communities. And I'll show you what I've done with that. So I've got here a new product, and we're having a Black Friday sale on it soon. Okay. And so I have all my courses here. You can download it on iOS as well as Android. And there is a community as well, which we recently launched. Yeah. And so people interact with each other. They share wins as well. And it's a lot of fun. Yeah. This is where the marketplace is going. If you're curious, you want to learn more about this. Oh, there's Jason. Nice. Awesome. Oh, dude, he's lost a lot of weight. Nice job, dude. If you're curious about this, to learn more, you can go to harounmba.com/community. And you get a 7-day free trial. And then you get a discounted rate as well. Just go here to haroun.com/community to learn more. And I'll put that in the chat as well. Give me 1 second. All right. Cut. Paste S special. And I once dated a Spanish girl who broke up with me because she said I need some S space. Paste S special. Okay. All right, let me take a couple more questions, and I'm gonna end the webcast. And then for those of you in my premium products, I'll see you at 10 a.m. for our 3-hour and 20-minute Zoom call today. Okay. All right. My brother is a millionaire from cannabis and has gifted me CBD products to sell and get started. People like the product, but it's hard for me to sell. Any tips for a shy person with, yeah. So I'll answer it generically. I can't. I'm so sorry. I love you. I love my heart, but I can't answer that question only because I don't think that cannabis should be legal. Unless it's for medicinal purposes. It's who I am, but I love you. Yeah. Or I'm lazy and I don't want to answer. One or the other. Yeah. Okay. Manas wrote, your friend who sold his company for $40 million, can you tell me more about him? As much as you can, please, assuming from money he had, I'm guessing he made ARR of 10 million a year. Yeah. So I don't want to disclose his first name is Kevin. He's a good buddy of mine. He just sold his plumbing company here in the Bay Area for $40 million. But I don't want to give much more detail than that. Yeah. Okay. Plus, he's full of shit. I'm just kidding. He's not. Okay. All right. So if you guys are seeing buffering on your end, let me know, please. I'll switch to yet another Wi-Fi network. Yeah, but just let me know. Okay. Next question is, Chinese AI are way better than American counterparts in terms of cost and optimization. Alibaba and Xiaomi, ByteDance, are all making their own models. What is a good investment? Yeah. I don't trust those. I'm sorry. I don't trust it because it's filtered and it could be monitored by the government too. Go on those websites, the Chinese AI products, and transparency builds trust. And ask it this question: what happened in 1989 in Tiananmen Square? It won't answer it. And then ask, what happened on 9/11? And it gives you a long answer. Yeah. I'm an idealist. It's nothing against, people in China, but I despise communism. I despise anything that, stops you from reaching your full potential in life. I despise big government. I love freedom of the individual. I love freedom of thought. I love freedom of speech. Yeah. And I know it's going to hurt my business. I get it. And it's really interesting because, do you remember Richard Gere? He was in that great movie, Pretty Woman. Have you seen him in many movies lately? Do you know why? Because at one of the Oscar awards, he said something about freeing Tibet. And a big export market for Hollywood is China. So he's too much of a risk. But I respect him for speaking his mind. And with transparency comes trust. This is a prop from just one of my courses. Yeah. Okay. All right, moving on to, what is a good investment according to you in terms of returns? Yeah. So as I mentioned earlier, I love what are called a 5x5, meaning a stock, after you do your investment research with my templates, if you want, where you see 500% return within 5 years. If you only see 15% return per year, just buy the VOO, ticker VOO. Yeah, there will be massive down years, I promise you, but I think it's going to be up 15 to 20% every year on average for decades. Okay. All right. Hello, I'm Joe. First time here live. I've been watching YouTube videos for a while. Just want to say hello. Thank you, Joe. I appreciate it. Thanks for joining my 5 free courses program as well. Thank you. Okay. And Joe, let me know what videos you think I should make next. I've done tons of movies on my YouTube channel. I've run out of things to teach, which is why I do a lot of movies and TV shows. And let me know what you guys want me to do. And I just ordered a box set for a TV show, a finance show called Industry. I've had a lot of questions on that one, and I might start making videos on the TV show Industry soon. There's 3 seasons. Season 3 is supposed to be the best, but maybe I'll do episode 1. I experiment a lot too. Like what I did was I bought the Suits box set, and I did episode 1. The video didn't do as well as I thought it would, so maybe I won't do Suits anymore unless you guys want me to. And I got to be a really sophomore and show you something here. I had this on my desk one day, and then one of my clients said, "Chris, why do you have sluts on your desk? What is that?" Suits. Sorry. Okay. All right. Next question is, how do you think mental health is going to play a role in day and age of AI? I see 1 in 4 adults are mentally tired in some way. Depression. Yeah. So from a mental health perspective for me, okay, and I suffer sometimes from depression, but I'm very open about it. And the way I deal with it is as follows, okay? So what I do is I try to get 10 to 20,000 steps a day on my treadmill in my office, okay? And the great thing about this, and these treadmills are cheap, you can get them for like $100. So what I do is I put this up a bit so I can type and stuff, but it makes me happy. And nobody's ever gone to the gym and afterwards said, "I wish I didn't work out today." Said no one ever. That's how I deal with it as well, just to release endorphins and stuff. That's just me. But if anybody on this webcast, is depressed, I recommend talking to your doctor as well. And I think that, I don't know, I think that you got to take one day off a week, or you'll burn out. Like if I, for me, I'm Christian, I take Sundays off. I don't do any work, no emails, nothing. But if I worked on Sundays, I would be a basket case on Monday. See, think of this like it's a muscle. You don't work out the same muscle group every day. You got to rest this thing. And by rest, I also mean 7 to 8 hours sleep every single night. Prioritize sleep. Yeah. But I do think with AI, we're going to be so dependent on non-existent entities that we're going to be missing something. Like we all have a need for affiliation, affection, etc., socializing. And if we're just dependent on AI, and it's going to get worse, I think there could be mental health issues. And that's why a sense of community is really, really important as well. And it's going to get worse too once robots, and I know it sounds crazy, but it's happening. A really good buddy of mine, he just subscribed to a service here in the Bay Area where you get a robot to come into your house and you lease it for $500 a month. He gets it, I think, in February. Yeah. And his name is Cameron, really good guy. And he's got a big company, which is caring for the elderly, right? And instead of sending nurses to people's houses, he's playing around this concept of a robot. And it's coming. And it's just a matter of time, eventually, that these robots are going to look like real people. And you know where I'm going with this. So I played this great video game called Detroit Become Human. And if you guys want to see what the future is going to look like when it comes to AI and robotics, y'all got to play this game. It's available on most major platforms, but not Switch. And I'm going to show this to you. Detroit Become Human. It's a masterpiece. Here it is here. Yeah, it's a great game. And what you do in this game is you're an android. Okay, and in between, it's made by Quantic Dream, I think. In between the cutscenes, what happens is this. You're asked a question while the next scene loads. And one of the questions was, and a couple thousand people answer this question. One of the questions was, would you date an android? And a couple thousand people, I think 70 or 75% said yes. And that's coming. And that's frightening. So I think we have to actually prioritize human interaction because it's going to get out of control with AI. Yeah. And you're already seeing on TikTok, for some reason, I get a lot of these ads. Not that I subscribe to them, but I'm always curious about AI-based girlfriends. It's scary, but that's where the market might be going. Frightening. Okay, give me 1 second. Yeah, Manas, you wrote, why is class flow so complicated? I don't know what that means, sorry. If you meant cash flow, please type the question differently. Thanks. Okay. What is the right time to get married? I know it's a stupid question. No, it's not. I don't think there's any timing, really. You'll know it when you, I don't know, when you feel it in your heart. Yeah. And before you marry somebody, go on vacation with them first. Because when they're away from home, you want to see if they're independent, all that stuff. Yeah. And Tedo wrote, and the Oscar goes to, thank you. Okay, and Vic wrote, hey, Chris, I noticed I get this question all the time. I noticed my progress in the Silver MBA program, one of my premium products, my website, is not syncing with my progress in the community under complete MBA program. Yeah, the reason is because I add lots and lots of stuff. So when I first released that MBA program, okay, it was, like 300 something hours. Now I think it's close to 500 hours. So as I put more content into it, I'm always adding. It dilutes the percent completion. Don't worry about that. All you got to focus on to pass, if you care about that, get the degree thing or whatever, is there's 100 quizzes. All you got to do is get over 50% on half the quizzes. Yeah, it's easy. I set it up that way because it's not fair. It's not fair that I would make you watch everything. I want you to pick and choose what you want to watch. Yeah. Okay. Then you wrote, Chris, you look great and energized as always. Thank you. The older I get, the better I was. Yeah. I love doing what I'm doing. Thank you. Can you believe I've been doing this for 339 weeks? Dude, I'm going to be doing this for thousands of weeks. Yeah. Like Joe Rogan's on episode 2000 something now, or maybe it's 3, I can't even remember. I just started listening to his Elon Musk one the other night, which is fascinating. Yeah. Okay. All right, guys, so I'm going to end this week's webcast now. If you guys want to set up a call with me to talk about, it's a free call with me, not my staff, with me, about discussing joining one of my products, if I can help you and all that stuff, just go to the link in the description. I'd love to hear from you. Or what you can do is just ask me questions on this weekly webcast. For those of you in my premium products, I have daily calls with all of you. It's at least an hour a day. That's 7 hours per week, meaning 300 hours per year. And in my programs, you also, and it's Q&A, Zoom. In my programs, you also get access to about 700 hours of my course content for life. And then you get 10 hours of one-on-one. So go to the description of the video, set up a call with me. And otherwise, I will see you guys next week, every Thursday, 8 a.m. Pacific time, forever. I think there's only 1 week this week where we don't have it. I think it's going to be Thanksgiving. I think. Maybe not. We'll see. Otherwise, I will see all of my premium clients in about 20 minutes or so in my Zoom. And today's Zoom class, every Thursday, as my clients know, is 3 hours and 20 minutes. God bless you all. I'm going to end this webcast like I always do with a short video interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. I have to say that. That will change your life. Thank you all, and God bless you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.